All right, welcome back to another episode, and we're continuing our series on financial distributors. And like I've said before, I have no idea how many episodes this is going to be, but we've talked about what the financial distributors are: banks, investment companies, insurance companies. We talked about what an accredited investor is. We talked about banking, retail versus commercial. And then we talked about investment companies. Okay. And so today's episode, we're going to continue to dive into this content and figure out what's the next thing we need to discuss that is extremely important. And that is the conversation and topic of alternative investments. And now let's keep in mind what I've talked about before. My little disclaimer is that we're not giving investment advice here. We're just giving you educational information. This is content. This is information to help you get a baseline. These links will be in the description. Go check it out. We're using Investopedia, which is a public site with a lot of links. That's why we're using it, to give you an overall 30,000 view point. You dive into the weeds. You can use their links and all their process and get lost into that rabbit hole as you see fit and choose. We're just starting that conversation for you, okay? All right, so that being said, let's dive into this a little bit more. So, what are alternative investments? So, remember when we talked about an accredited investor, the Securities Exchange Commission's definition of an accredited investor? This was important because this allows you to understand or have access to alternative assets, alternative investments. Okay, this is important because based on that accreditation, being an accredited investor gives you this access to where the Securities Exchange Commission says, okay, you can make your own decisions, which isn't that what we want? Oh, thank you so much for giving us the ability to do that. Now, of course, we're still on the road. We're still on paved road, right? We didn't all of a sudden just go off the road and we're blazing our own trails. We're still on the road. We're just going down a safe path that was designed for us. Scan your membership card at the gate. Gate opens. Go down that road. You have access to that. Okay, and so that's essentially what we're looking at. So, what is an alternative investment? It's a financial asset that does not fall into one of the conventional investment categories. Conventional categories include stocks, bonds, and cash. Alternative investments can include private equity or venture capital, hedge funds, managed futures, art and antiques, commodities, and derivative contracts. Real estate also is classified in this area. Holy cow! Are you kidding me? Look at all this treasure. An entire world now has opened up to you. Entire world. And here's the funny thing. A lot of investment advisors, financial advisors, do not understand this world. They don't. Whether they're part of a broker dealer that does or doesn't take in consideration this area, or a RIA, a registered investment advisory firm, does not take this into consideration. A lot do not have this. Wow, that is huge. And there are many times where these are designed to actually be safer from a risk perspective with the potential of a greater return, but you have access to this because you're accredited. Versus the non-accredited, there's a very focused box. Everyone fits in this box, period. Period. Now, as an accredited investor, you can go into this box, and this is where we find a lot of our members that are accredited investors are in this box also. Why? What I just said. A lot of financial advisors don't understand this world. Just don't. And there's not a knock on them. Why do they need to when they're doing really well in this box? They just need to know this box. Okay. And you may have started with them when you were non-accredited and you're in this box. And now you are accredited. So we work with a lot of doctors. You may have been in residency, not making a ton of money, working with somebody. So you're not accredited at that time. All of a sudden you get into practice, you get into a job, and now you're a accredited investor based on income and your assets and net worth is starting to grow. And now you should have access to outside this box, but you don't. Well, we really like our guy. Awesome. Like him. Not a big deal. You actually can like him in this box. And then you have access to everything else outside the box as well. So you can have both. Just not if this guy doesn't know that. If he doesn't know the outside world, you don't want to do anything with that. Okay. So an alternative asset, or I say asset, they use the word investment. An alternative investment is a financial asset that does not fit in, which we talked about, private equity. Most alternative investments have fewer regulations than U.S. securities and do tend to be illiquid. That's where the safety comes into place. When I say safety, I mean the lower risk, right? If you need liquidity, this goes back to the last episode when I was talking about cash or liquidity within an investment. You should have your liquidity in your own liquidity bucket. That should be part of your overall plan, not necessarily your investment portfolio, but your overall plan should have a bucket of liquidity. Not just emergency money, but storage money. Money that is stored for opportunities that come up. And they do come up. They do come up. Very important to understand. Now, while traditionally aimed at institutional or accredited investors, see, alternative investments have become feasible for retail investors via alternative funds. Same thing, right? Yes, you may have access to alternative assets, but you're still within a mutual fund. But they do have all those same box regulations. Okay. And by doing that, you do give up. You do give up. So I would say, like I said, all of our members that we have are accredited investors. That's not why they're members, but they just happen to be that way. And so most of them don't understand this entire world. They don't. They're like, wow, I didn't know I had access to all that. Yeah, I know. So common forms of alternative investments include real estate, commodities, cryptocurrency, collectibles. So we don't see a lot of cryptocurrency so far in this area. Historically, it's been real estate and collectibles have been the two big ones. Promissory notes, you can have promissory notes as well, meaning that you lend money to certain institutions or entities that you get a return back. You become the bank, so to speak. That's what a promissory note is. Okay. So there's a ton of information in here. I'm just going to talk off guides. You can dive into this and you can talk about all this stuff and real estate and commodities. Farmland's awesome. We have a relationship we work with farmland. This is great because people need to eat, right? Real estate, people need a roof over their head, that sort of stuff. Art and collectibles. We do have members that have had this when they come to us. But each of them are like, well, I don't know. I just thought it would be a good diversification. But I'm not sure if I'm really getting what I need out of it. And the value seems to be lower than what I bought into it, which is honestly what I hear a lot of times about real estate as well. Yeah, we got into this. I was supposed to get a certain type of income and I don't get that income. So I'm not really sure what this is, so it's really important to understand venture capital, private equity, peer-to-peer lending. This is that promissory note I was talking about. And so there's a huge, now there are advantages and disadvantages. I think the biggest disadvantage to all alternatives is the illiquidity. Plain and simple is the illiquidity. And then the other disadvantage is other people who are offering these alternative assets. And when they're offering them, they're not meeting the expectation of what they said it would, meaning that, oh, you're going to get a 7% income, preferred return, but now you're getting 5. Why am I getting 5? You said 7. That's what I went into this. Well, and it's illiquid. So that's the biggest issue that we have seen. So that's why what we have done is we've actually gone through this process of developing our own private placement funds for our own members. We don't advertise it or anything like that. So again, this is not advertising. I'm not telling you you have access to this. They have to be members. They have to understand. We have this entire educational process of understanding videos and all this stuff before we even let them into not membership, but into these types of assets, understanding the liquidity, understanding why it's done. It's very important. And a lot of times we have found that we have members that have said, you guys go into a lot of detail. I don't necessarily understand everything you said, but thank you. To me, that's a compliment. It may not have been a compliment, but I take it as a compliment because we want you to understand we know what we're doing here and why we're doing. That's the key. Why are we doing it? You can know what you're doing, but do you know why you're doing it? And that's where we find a lot of people in this financial distributor world that utilize these products and services from these financial distributors do not understand why they're going to access these. They may know what they are, but they don't know why. And that is the thing that you need to understand. Why? What's the purpose for your overall plan? Not just because I have extra money and I have to do something with it. Okay? No. You need to do the education. Again, it goes back to what I was saying before. We appreciate when our members say, Bob, we trust you guys. Just go ahead and do it. Thank you for the trust, but we're not just going to go ahead and do it. We're going to tell you and explain to you what we're doing, why we're doing, and what it has to do with the purpose of your purpose. It's your money, not ours. Sorry. But we're not sorry. That's the way it, in my opinion, should be. And so when we're looking at the alternative asset place, understanding the illiquidity, but again, does that really matter if your overall plan is to build wealth? Should you have access? Should you need this liquid? No, that's why you need to have a liquidity bucket. 20, 30, 40, 50% of whatever you have, whatever is comfortable, makes you sleep well at night. What's in your liquidity bucket? Now, what is liquidity bucket made up of? Well, Bob, it doesn't make sense if it's just sitting in cash. No one said cash. It said liquidity. Liquidity is different than cash. Liquidity is access to the funds that are within that particular category and bucket. Liquid. I have access to it. That's what makes it liquid. Okay. That's important to understand. Okay. And so anyway, so that's important from our perspective as we discuss this and go through this alternative asset steps is understanding the alternative assets. The reason being is that the next episode, we're going to go into derivatives and collateralized debt obligations. Okay. And these are common things that that affected us back in 2008, the great financial recession, right? The 2008 when we had all the financial issues that caused interest rates to go to near zero, created this 10, 20 years of 15 years of low interest rate environment until most recently after COVID. So derivatives and collateral debt obligations, CDOs, or collateralized mortgage obligations, CMOs. These are other alternative assets that we're going to dive into in the next episode. So this episode is going to be a little bit shorter, just for that fact that we kind of gave you an overview of alternative assets. We don't call them investments. We don't call any of our investments at Terra Firma. They're all assets. What's an asset? So what we talked about in the very beginning, something that appreciates and grows and should create some sort of income down the road, whether it's capital gain because you sold it or cash flow stream that becomes income. But you got to understand again the three stages of an asset. So if you haven't seen that episode, go check out our episode of three stages of an asset, the rules of an asset. Look at that. We talk about the 5 Ds. And that's all very important information as we go into this episode in this series of financial distributors. So thanks so much for being a subscriber. If you are, if you're not, man, you got to subscribe. This is such gold. This is such good information. And all of this leads to tax savings. All of this leads to wealth accumulation. You've heard me say it before. And if you're new to this, you cannot have wealth accumulation without tax savings. You cannot have tax savings without wealth accumulation. They are fraternal twins. Mom and dad is the same. The legal system and the tax system. Mom and dad's the same, but they are different. Okay. They work separately. They work differently, but they are from the same. And you can't, the wealthier you get wealthier because of understanding this. Okay. So you need to understand, and there's so much gold in this channel, giving you the basics understanding of the rules and the information to where you can dive in deeper, or you want to learn deeper. We have the deeper if you want the deeper. So thanks so much for subscribing. Give us thumbs up for this content. It really helps with the algorithms. Everyone says that, right? I don't even know what that means, right? So, but that's great. I don't need to know what that means. Somebody else knows what that means. I know it's important to say, hey, thumbs up for algorithms. So make it a great day.